Good afternoon. The committee will come to order. We meet today to consider H.R. 1232, a bill that restricts the use of taxpayer funds for abortion. It is, we all know, not an issue this committee considers often, and it is certainly one that many of us have strong feelings about. And while I expect there will be differences of opinion today, I do hope that we will stand together in protecting the jurisdiction of this committee. When Mr. Rangel and Mr. Levin were in the chair, I backed them every time without hesitation when it came to our jurisdiction. It is not an issue I take lightly, and with good reason. We are the only committee whose authority is directly derived from the Constitution. Tax measures must originate in the House, and those matters are our sole jurisdiction. I do not intend for the committee to abdicate its constitutional responsibilities. So before a tax bill goes to the floor, you can expect us to ensure that it is done correctly. I firmly believe that this committee has some of the most talented members of Congress serving on it, and that goes for both sides of the dais. I have every confidence that we can walk and chew gum at the same time. We can deal with job-creating trade policy, as the Trade Subcommittee did yesterday, and job-creating fiscal and tax policy, as the full committee discussed yesterday, and continue to push the Senate to pass a pro-jobs 1099 bill and advance a long-term FAA reauthorization bill that many in the Senate have called a jobs bill, which is on the floor today, and still deal with other legislation, such as the bill before us today. H.R. 1232 in general codifies the long-standing bipartisan Hyde Amendment, which prevents taxpayer funds from being used for abortion-related costs. According to the Joint Committee on Taxation, it will have a negligible effect on revenues. It is not a tax increase, despite what some have wrongly suggested. The legislation is necessary because Democrats' health care law included a massive expansion of the IRS's authority and concocted a host of ways to funnel taxpayer funds for various costs and procedures, including abortions. In response, our colleague Chris Smith introduced H.R. 3, which is designed to prevent the use of taxpayer funding for abortions. However, as a hearing on the Select Revenue Measures Subcommittee 2 weeks ago revealed, the tax implications of that measure were unclear. Simply put, it is our responsibility as a committee to address the valid concerns raised in that hearing. In a moment, we'll hear from Tom Barthold of the Joint Committee on Taxation for a technical walkthrough of the legislation. But before we do so, I want to be clear about what the legislation would not do. It would not affect either the ability of an individual to pay for an abortion or abortion coverage through private funds, or the ability of an entity to provide separate abortion coverage. It would not apply to abortions in cases of rape, incest, or life-threatening physical condition of the mother. It would not apply to treatment of injury, infection, or other health problems resulting from an abortion. This is about making sure taxpayer funds are not used to pay for abortions, but does not affect the use of private funds. Thus, we are basically codifying the Hyde Amendment in the tax code. And with that, I will yield to Mr. Levin for his opening statement. Without objection, all members' written statements will be included in the record. Mr. Levin.
Thank you, Mr. Chairman. And I would now like to yield to the Ranking Member on Select Revenues, Mr. Neal, who will deliver our opening statement.
Thank you very much, Mr. Levin. And Mr. Chairman, I agree with you on one very basic point that you made with a qualification, and that is you said you don't remember or you don't think that oftentimes we've discussed the abortion issue here at the Ways and Means Committee. Let me point out that in my 2 decades on this committee, we have never had this sort of a discussion on this committee. Earlier this month, the Select Revenue Measures Subcommittee held a hearing on H.R. 3. The good news is that the bill before us today is an improvement. The bad news is that it's still a bad idea. This bill goes beyond the Hyde Amendment, which I believe is a settled principle, in that it turns the federal funding concept on its head. I believe even Henry Hyde would have blushed at the stretch that's involved here. And I think that it's dangerous territory for my Republican colleagues, especially considering that the Supreme Court has a case before it involving scholarships for a Christian school, questioning whether tax credits are government spending. Consider the comments of Justice Alito during the argument, quote, "You think that all the money belongs to the government except to the extent that it deigns to allow private people to keep some of it." And those of Justice Kennedy, and I quote, "I must say I have some difficulty that any money that the government doesn't take from me is still the government's money." I think the answer from this committee is yes. We will intrude into your life in the most difficult of circumstances and send in IRS agents. the ultimate bean counters to determine whether your medical records, your criminal records, etc., are sufficient. But not all pregnant women will face this dilemma. If they are wealthy enough to not need premium assistance, then the IRS will not audit their decision. If they are fortunate enough to work at a large corporation not needing small business health credits, then the IRS will not audit their decision. This bill adds more complexity, more uncertainty, and more intrusiveness to the inequities in the code. Mr. Chairman, I cannot recall again at any time in 2 decades on this committee, and I have checked with staff as of yesterday who served here for 10 years before me, that this sort of decision was brought to us. We've devoted a full hearing and a markup to this topic. I regret that it takes away from our attention and our shared goals of job creation and tax reform. And I also regret that this bill will end up being just an overall tax increase on women.
The committee will now proceed to consideration of H.R. 1232. Without objection, the bill will be considered as read and open for amendment at any point. I offer an amendment in the nature of a substitute, which was distributed in advance along with a green sheet explaining it. Without objection, the amendment in the nature of a substitute shall be considered as read, open for amendment at any point, and considered base text for purpose of amendment. I will now turn to Mr. Barthold, Chief of Staff to the Joint Committee on Taxation, to provide the technical description of the amendment in the nature of a substitute, and I would ask that members hold their questions until after his presentation.
Thank you, Mr. Chairman and Mr. Levin. I will try to, in the next couple of minutes, just briefly outline what I see as the five main substantive points before you in H.R. 1232 as amended by the Chairman's amendment in the nature of a substitute. Under the first provision of the bill, an amount paid for an abortion would not be allowed to be taken into account for purposes of the deduction for medical expenses under Section 213 of the Code. As the Chairman noted, abortion in this disallowance would not apply in the case of an abortion that is the result of a pregnancy that is a result of rape or incest, or in the case of a woman who suffers from a physical disorder, injury, or illness that would, as certified by a physician, place the woman in danger of death unless the abortion is performed. The second main provision relates to the exchange credits established under the health care reform legislation of last year. For individuals whose income is less than 400% of the poverty level, they can be eligible for tax credits to help acquire insurance through the state-established exchanges. And the second main provision in the legislation amends the definition of a qualified health plan so that it excludes health plans that cover abortions. The consequence would be that the purchase of a health plan that provided for abortion services other than the excluded abortions that I just noted, rape, incest, endangerment of the mother, the taxpayer would not be eligible for the credits. The third provision relates to the small business tax credits provided under the health care legislation, and this provision also says that a health plan that includes abortion coverage would not be considered a qualified health plan for the purpose of determining eligibility for the small employer health credits. And so as a result, contributions by small employers towards such a health premium, if it covers abortion, would be disregarded when determining whether the employer is eligible for those tax credits. The last two provisions in the legislation before you relate to distributions that may be made from health flexible spending accounts, health FSAs, and from health savings accounts, or Archer MSAs, Archer medical savings accounts, and health savings accounts are HSAs. With respect to the health flexible spending account, any reimbursement from a health flexible spending account under a cafeteria plan for expenses incurred for an abortion would be includable in the gross income of the employee. With respect to distributions from health savings account, HSA, or an Archer medical savings account, MSA, a distribution from those accounts used for the cost of an abortion would also be includable in the gross income of the taxpayer. Mr. Chairman, that concludes my brief description of the main points in the legislation before you. Happy to answer any questions that you or the committee members might have.
All right, thank you very much, Mr. Barthold. Are there any questions for Mr. Barthold? Mr. Levin, you are recognized for 5 minutes.
Thank you. Mr. Bartold, is there a definition of abortion in this bill?
There's not a definition of abortion specifically in the bill, sir. As I noted, there are certain excluded abortions. I noted the case of
Right.
pregnancy, rape, or incest, endangerment of the mother.
Please.
Would the gentleman yield
Yes.
at that point? Are vasectomies covered in this, Mr. Barthold?
I wouldn't think that they would be, Mr. Stark.
So,
You mean covered by the legislation?
Yes.
Under present law, if I chose to have a vasectomy, that would be an eligible payment from a health savings account, from a flexible spending account. I could, if it were not covered under my health insurance plan,
Right.
deduct it as an itemized deduction. If that was your question, I answered.
That is, but would this be included as an
This
affordable?
legislation does not change the definition of medical expenses. With respect to Section 213, it changes the definition of what may be a qualified medical expense for the itemized deduction only with respect to abortion services.
Thank you.
now, if there's no definition, is it clear whether it would cover both medical and chemical-related procedures?
Mr. Levin, as a basic matter, the term abortion is not really defined in the United States Code. There are two references that my colleagues have found. One's with the Civilian Health and Medical Program for the Uniform Services, and others in relation to the Social Security Act. Neither definition, and I could read those definitions to you if you'd like, neither make clear whether drugs that would prevent implantation of a fertilized egg would be considered an abortion. So there's grayness to present practice. It's the same. The chairman noted that thinks that the legislation is trying to follow the Hyde Amendment, and I don't think we're changing. I don't think this legislation changes any interpretation that has been federal practice for the past number of years.
So, for example, it's to a morning after pill. It's not clear.
That's unclear, sir. Yes.
So therefore, if any policy covered it, it could be that as a result, the credits could not be used for that policy. It's possible. That's an open question.
I'd have to say that's an open question, and so
Okay.
it might be one where the Treasury and the IRS would provide some guidance.
And if someone wanted to follow this approach and indicate that no credit could be used in where there's a policy that allows a procedure that is derived from embryonic stem cell research, is it possible that as a result the credit could be, that the law could be amended so the credits could not be used in that case?
Mr. Levin, just to be clear, you're creating a hypothetical, not just with respect to abortion,
No,
but some
exactly.
other medical procedure,
Exactly.
some other.
Exactly.
It would, if the committee thought that it could adequately define a procedure that would be excluded, I would think that would be within the committee's jurisdiction. I will note that some 25 years ago, the committee voted to exclude plastic surgery from as a qualified item, medical expense. So a
this
change
relates to credit.
limiting the scope of qualified medical expenses is clearly within the jurisdiction and the ability of the committee.
Thank you.
Are there any further questions? Mr. Neal?
Thank you, Mr.
You're
Chairman.
recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Barthold, let me ask you a couple of questions. Let's consider the case of a woman suffering from a severe and chronic heart condition who has been advised to terminate her pregnancy. Under this bill, when she deducts those medical expenses, the IRS would determine whether or not the deduction was appropriate. If the doctor believed her heart condition would worsen because of the pregnancy, but may not prove fatal, then the doctor could not satisfy the IRS certification test as specified by this bill, and her medical costs would be denied. Is that correct?
Let me equivocate just a little bit. This was a point.
There's a lot of that today in this room, Mr. Barthold.
Well, I'm sorry that I'm sorry in my particular instance. As was noted in the Select Revenue Measures hearing, there's a gray. It's a gray area in terms of when someone's health might be endangered, and what the legislation provides is that if a doctor certifies that there's an endangerment of in the case of the woman's life, that the payment for the abortion from an FSA and MSA would not lead to an income inclusion. So let me take as a premise of your question that, in fact, a doctor felt they were not able to make this certification. If that were the case, then yes, under the legislation, if a payment were made from an FSA, or if a payment were made from an HSA, or if the taxpayer claimed this as part of an itemized deduction under Section 213, though, which you could do under present law, that would not be permitted after this legislation.
Okay, no, I understand that there are more complicated abortions that could cost $10,000 or more. So with the changes in this bill, could a tax increase on this woman be somewhere between $1,000 to $3,500?
Let's see, since our marginal tax rates go from 10 to 35% for a $10,000 income inclusion would increase taxes between $1,000 and $3,500. Yes, sir.
So when joint tax finds that a bill has a negligible revenue impact, that is in the aggregate, is it correct that since this very sick pregnant woman could have a $3,000 tax increase, would we deem that not to be negligible?
Yeah, Mr. Neal, our estimates are always the effect on aggregate federal receipts. As you observe, when we change definitions, some individuals could have a higher tax liability than they would have had prior to the change, and some others can have a lower. But in the aggregate, there's a negligible effect on federal receipts.
Under the new health care law, health exchange plans could cover abortion services, but only if the plans collected two premiums from the enrollee, one for the cost of abortion coverage and one for the remaining cost of the plan, and if it kept those premiums segregated from any tax credits or other government assistance. Under this bill, though, no one using premium assistance credits, all of whom are low to middle income families, can still choose a plan covering abortion services, even if they paid for that coverage with their own money. So, all of these low and middle income women would be segregated into one plan prohibiting abortion, but those wealthier women not needing the premium assistance could be in a separate plan that did provide abortion coverage. Is that correct?
That's a possibility. Again, it would depend upon how the market for individual coverage shakes out. I mean, if there were insufficient demand for in the individual market for the coverage, you might not see such plans. But that is a possibility depending upon the size of the market.
I understand that the reason that H.R. 3 was referred to the Ways and Means Committee is that despite the fact that it does not amend the tax code, it does seek to end, as the title of the bill states, taxpayer funding of abortion. If the chairman's mark passes, it seems that there could be no limit to any tax deduction or tax credit in the code being considered public funding and subject to our scrutiny. Mr. Barthold, one could argue that the deduction for charitable donations, like the various deductions and credits targeted by this bill, or even the tax-exempt status afforded religious groups, could be viewed as taxpayer funding of certain religions. Do you agree with that statement?
Mr. Neal, a point that was raised again in the subcommittee hearing related to this, and I think I noted at that time that there's presently before the courts a case, Freedom from Religion Foundation versus Geithner. Now, what the case is about is it looks to a couple of special tax provisions that relate to, quote, ministers of the gospel, end quote, and suggests that that is the establishment of a state religion.
Right.
Some legal observers have asked whether, in the same vein, a charitable deduction to a religious organization would be an establishment of a state religion. So, I mean, the broad question that you're asking about whether a charitable deduction could be determined to be a funding is before the courts. And I, of course, have really no opinion on that or special legal knowledge.
Thank you. The gentleman's time has expired.
Thank you, Mr. Chairman.
Sure. Any further questions? Mr. Doggett,
Thank you, Mr. Chairman.
you are
If I-
recognized for 5 minutes.
Thank you. If I understand, really, the focus of this legislation is on addressing a tax expenditure.
Yeah, yes, sir.
And tax expenditures, though they've sometimes been questioned as a concept by many of the supporters of this particular measure, basically anytime you have a preference, they're defined by statute, a preference, a deduction, a credit, those are different forms of tax expenditures.
That's correct.
And every time this committee votes to grant somebody a deduction, a credit, whatever, however lofty the purpose, it is a form of tax expenditure that is committing public resources.
That's the general definition, sir. Yes, sir.
And with reference to this particular one, while its supporters claim that it is going to eliminate all tax expenditures for abortion, it doesn't really do that, does it?
No, as
Because there are many kinds of tax expenditures that are being ignored that do further abortion, if any of them do, that are not being touched by this measure.
I don't know about the number of many.
Well,
Yeah,
let me
the
ask you
answer is
about some
yes, there are.
specific
For
examples.
example, a health insurance paid by your employer.
Right. In other words, if you're a
is
large
still-
corporation and you provide health insurance to your employees, in fact, you could have an abortion-only policy that covered nothing but abortion, and you would be able to deduct that, couldn't you?
I think that's correct, sir, yes.
So that's one of the provisions that's not covered by this bill. Now, suppose you are a large pharmaceutical company and you're in the business of developing pharmaceuticals that are used in the provision of certain kinds of abortions, or you're a medical device manufacturer and you're involved in the development of medical technology that is used in abortion, that tax expenditure for those kind of things, that's not touched by this measure, is it?
The legislation before you does not address development of pharmaceuticals or medical
Right.
devices.
In other words, it would appear, as is so often the case with tax expenditures of totally different nature in this committee, that the majority has picked and choose which particular provisions in the tax code that deal with abortion it would address and which it wouldn't, and it has picked on poor people, and it has chosen not to address those provisions in the tax code that, if any of these things advance abortion, which I think is questionable, they do not touch those that affect the really big enterprises and operations, some of which have chosen voluntarily to be involved in this area rather than a woman who may well have no choice. Now, let me ask you also, and Mr. Neal referred to this, for all those people that have had a little concern about the fact that they signed a rather irresponsible pledge to Grover Norquist, always flexible in his interpretation of his pledges, there's some individual taxpayers, a woman with cancer who's being treated with chemotherapy and who already has a lot of health expenditures, who determines in counseling with her family and her physician that she must have an abortion even though her life may not be directly endangered by the failure to do so, and she may face a rather substantial tax increase as a result of this bill. Right?
The example that Mr. Neal posited said that the physician felt he could not certify that there was
Right,
endangerment.
and that's the same kind I'm suggesting, that there are circumstances where
So
a woman
item,
could...
for example, an itemized deduction then under Section 213 would be denied for those.
We're going to be talking about tens of thousands of dollars of medical expenditures, and her taxes could go up substantially. So as I understand the Narquist pledge, it's okay to raise taxes on individual taxpayers substantially, as long as you pick on the right taxpayers. Thank you very much.
Thank you. There are 2 votes that have been called on the floor, and so the committee will recess and will resume immediately after votes. committee will be in order. Are there any further questions for Mr. Barthold? Mr. Thompson.
Thank you, Mr. Chairman. I think it's been noted that we have already heard a similar bill in our subcommittee, similar to this legislation, but I really believe that Big Brother is still very much alive and well in this new draft. Mr. Barthold, last week when we had the hearing on H.R. 3, I asked you some questions about this and the intrusive nature of the bill. And you told me that H.R. 3 did not include details on how it would be enforced. Does this new revised legislation explain how it would be enforced? For instance, in the case of tax-preferred accounts for health expenses, such as health savings accounts?
Mr. Thompson, the legislation before you makes no changes in Internal Revenue Service procedure, leaving it to the commissioner to come to appropriate procedures. Could describe that in general, a claim under Section 213 relies on, first on the tax, what the taxpayer puts on their return, and the taxpayer then primarily bears the burden of proof of substantiating that, but no specific documentation is required to be submitted with the return.
Thank you. Then we'd still have a situation where a woman would have to certify that she isn't paying for an abortion every time she uses her health savings account to pay for different types of medical expenses. And the IRS agents would still be at a woman's door demanding documentation providing or proving that the pregnancy she terminated and paid for with money that she saved in her HSA was the result of rape or incest. Not only is that insensitive to put this type of burden on a woman who may be going through just an absolutely terrible time in her life at that particular time, but I don't believe it's workable. A criminal case against someone accused of rape could take months, could take years to prove, and I don't think those fit nicely with inside the tax season. I think this is ridiculous policy. It's unworkable, and I urge everybody to vote no. And I yield to Mr. Doggett.
So would this, Mr. Barthold, leave it to an IRS agent to determine whether a woman's pregnancy originated from rape or whether there was consent?
Well, if I could just clarify a little bit. Remember, our basic working premise with our tax system is that the taxpayer honestly, reports what is, what may be deducted, what is earned as income. The IRS provides some guidelines. We have the instructions. Under present law, and it would not, to my read, be changed by the legislation if in the case that you posited someone had a pregnancy that was terminated on account of rape, there would be no line on the tax return. There would be no line on the form that one files for HSAs that specifically says was a distribution made for an abortion that was terminating a pregnancy by rape. The taxpayer would honestly report that. So the only case where a question might be raised would be if it were raised on audit, and there's not a particular, I can't think of any particular reason why from what is on the return that you would raise that question. It would have to come up in the context of a broader audit if an agent wanted to question in general itemized deductions and asked for substantiation
under that circumstance, you could have the IRS agent being involved with the woman's very personal issues.
The burden of proof.
We heard so much about an army of IRS agents assaulting people over the health care bill, but this really does place the IRS agent in the middle of one of the most personal and private decisions guaranteed by the Constitution, despite the attempts of some to end that guarantee. Thank you.
Thank you.
Mr. Chairman?
I think Ms. Black has asked recognition. Ms. Black, will be recognized for 5 minutes. And to the extent majority and minority are asking, I will go back and forth. So Ms. Black is recognized for 5 minutes.
Thank you, Mr. Chairman. And I want to say that this is certainly not an issue that we would like to be dealing with. It's a very sensitive issue. And I think that we'll all agree that it's not an ideal issue for us to be talking about. We must, because of there's long been strong support for federal tax dollars not to be used for abortion, and this bill would make what was the Hyde Amendment that was done every year a permanent law. And so this bill has been carefully and narrowly applied to the subsidies in the tax code. I think there's some hyperbole here by the members that have spoken on this so far, and we need to keep in mind that we already know how medical expenses of all sorts are treated under the tax code, and taxpayers who use the itemized deduction for medical expenses or have HSAs or MSAs or FSAs do not identify each medical expense on their individual tax form currently, as has already been said by Mr. Barthold, that the IRS would not be necessarily coming in, and there would be no reason for them, just as today, there's no reason for them to go in and look at an FSA or MSA and see if what they're saying they used under that qualifies. So it's important to make clear that no one would ever be audited just because of an abortion. As a matter of fact, they wouldn't even know that. The IRS would not know that by what is on the tax form. They would already be under some other audit before the IRS would even consider asking about that medical procedure. I also want to bring up the fact that many types of medical care are very private, as is this particular situation. So thinking about some things like psychiatric care or drug and alcohol rehab, and taxpayers who don't want to tell the IRS about those issues can also choose not to claim tax breaks for those same kinds of care. And even if this issue did arise in an audit, other federal agencies like Medicaid and the Federal Employee Health Benefit Plan have no difficulty right now, currently, under the current law, distinguishing between abortions that were by rape or incest or elective abortions, and have done so without a reporting requirement. And so they generally accept the statement of the provider, and I would expect that the IRS would do the same in these extreme and rare situations. So that is not a change from what has already been done, as I say, with the dollars that have been used currently in those situations under the situation of using taxpayer dollars for Medicaid. That doesn't mean that this is not a very stressful situation for that small group of women, and I can certainly understand that it is incredibly difficult, and my heart goes out to them. But if we claim a tax benefit for something and we get audited, you can either choose to forego that tax benefit or else prepare to substantiate the tax benefit. So this is no different when it's talked about of how do we make that decision. The IRS agents would be using the same kind of standards that would be used currently under the situations where taxpayer dollars might be used underneath of the Medicaid program. So I think there's a lot of hyperbole here. Thank you, Mr. Chairman. I yield back.
Thank you. Mr. Lewis seeks recognition. You are
Yes,
recognized
Mr.
for
Chairman.
5 minutes.
Thank you very much. Mr. Chairman, I want to yield my time to Mr. Neal.
Thank you, Mr. Lewis. Thank you, Mr. Chairman. Mr. Barthold, in your professional capacity, how long have you served?
He's coming up on 24 years now, Mr. Neal.
Do you recall at any time during those 24 years, knowing the regard that I hold for professional staff on both sides here, do you recall at any other time when there was an abortion measure before the House Ways and Means Committee of this magnitude?
I did not double check, but I do not recall one, sir.
Thank you.
Thank you. Mr. Pascrell is recognized for 5 minutes. Oh, I'm sorry.
Thank you, Mr. Chairman. Mr. Chairman, I went back to Section 1303, which are the special rules in the Health Reform Act. Went to Part B, prohibition on the use of federal funds. Since I've been in the House of Representatives for almost over 14 years, I have never, ever voted for federal dollars for abortion, ever, under any circumstances. So when I voted for the Health Care Act, I made sure and worked with those folks, whether they were pro-choice or pro-life, to come up with very specific language. And Part 2 is very specific to me, Mr. Barthard. I don't know if you're familiar with Part 2, prohibition of the use of federal funds. Very specific here. This is in the Health Care Act. And Section B is a section called segregation of funds. Are you familiar with that section?
Yes, I'm somewhat familiar, sir.
It says very specifically, in the case of a plan to which subparagraph A applies, which we're talking about prohibition of use of federal dollars, the issuer of the plan shall, out